Hello everyone. Just let me know if I am audible and if you can see the slide, then we can begin with the session. Yeah. Can you see a hi written here? It's all set. We can start. Okay, chalo. So let's get started. What we are doing in accounting, I have already told you in the previous session. I asked you, I expected you to watch the accounting 1, 2, 3, the old videos which I had done a couple of years back, which will give you the complete idea of preparation and presentation of company's final account. So this part F, if you have watched 1, 2, 3, we have already done. A part of ratio analysis is also done. Now what I have to take you through is the cash flow, fund flow and financial statement analysis. That what I will do, I'll pick an actual company. We will try to understand its cash flow, fund flow, all the financial statement we will understand. We'll do the financial statement analysis and we'll also try to do the ratio analysis for that and compare it with the industry analysis. That will be our agenda for the next session. So I expect you to have watched all these accounting 1, 2, 3. Otherwise, you will not have any understanding of whatever I teach you in the next session. For now, what we will do is this accounting as a financial information system. It's the basic of accounting that you need to understand. Followed by that, what we have to also understand now in detail is the accounting standard. Thankfully, what they have given to us in the syllabus is of limited, say, scope. They have asked us to do for depreciation, inventories, revenue recognition, fixed asset, foreign exchange transaction and investment. So that is our agenda for today. This was your homework. I expected you to in the next class. Along with this, the questions in this, along with an actual, say, as a case study, I'll pick up a company for which we will do the complete financial statement analysis and ratio analysis. And within the process, we will also look at those some of the questions which are traditionally asked in journal entries, etc. That is the agenda for the next class. Now, I have already told you the agenda for today would be the accounting standard and what we'll be looking at. The first accounting disclosure of accounting policy. Why I have put it? Because I saw one of the questions in your given handbook, which I think they have given along with your admit card. There they have put one question. Right now, according to standard 2, if you look at this, this is valuation of inventories we will be dealing with. Then they have given depreciation accounting, but now for all practical purpose 6 and 10 are merged. So if you okay, I'll come to what I wanted to say. Okay, now the revenue recognition we have to look at. Accounting for fixed asset, I told you 6 and 10 for all practical purpose they are merged, because depreciation for all practical purpose it is for your fixed assets, plant, machinery, etc. The effect of change in foreign exchange rate. This is a little tricky. I'll come to it. I'll explain a little detail what is tricky here when I come to it, and then finally accounting for investment. That is your syllabus. Though the accounting standard run a kind, its list is quite long, but this is what we will focus on as per the syllabus of your SEBI. All right, I hope this is fine. Then we can move ahead and get started with our first question for the day. Let's see how many of you get it right. Please try to understand, guys, this is very theoretical. Yeah. At the same time, it is conceptual also. So first, without theory, you cannot survive here. And then you also have to understand the concept properly. You have to imbibe those concepts. So it cannot be just superfluous reading. You have to give good detail, good amount of detail. You will have to read it with concentration and understand what do they mean by each and every word. Okay, I was talking about how they kind of evolved. So we initially had our own accounting standard, and then there was GAAP, generally accounted principle, yeah, accepted accounting principle from US. And then we have what is something called IFRS, right? So what we are trying to do now is the Indian accounting standard, the new that INDAS, we are trying to be as close to IFRS, and for that we have been working for almost 15 years now. We can say we are almost there, and even IFRS does not want a to kind of copy paste it, but be as close as possible to it reasonably. That is what we are trying to do here. Chalo, let's so our INDAS is what we will be referring to, which is very close to IFRS, is what you should understand. Why I have mentioned gap, that also you will understand because of the various textbooks that you would be reading versus what is given in the accounting standard on the ministry's website. There is a little say difference there, which I'll explain. First, give me the answer for this. Give it a try, no problem. प्रशांत, अगर आपने फॉर्म भरा है, डू यू हैव एनी ऑप्शन? या तो आप एग्जाम नहीं देंगे, देंगे तो जितना पढ़ सकते हैं पढ़ लीजिए, जितना हो सके, ट्राई इट. Okay, so what I've done here is I have taken it from the, again, ministry's website only. As per what is mentioned in the document, they are talking just about three things. Always remember GCA. GCA is the fundamental accounting assumption, which is going concern, right? Then we will talk about consistency, right? And then accrual. Transparency, etc. It is not, though it should be, yeah, but it is underlying assumption. GCA is what you should remember are the fundamental accounting assumption. What is that? Going concern. Going concern means you do not expect the company kal band ho jayega. It will shut down tomorrow. You will expect the country, your company to be perpetual in nature, its operations to be perpetual, and that's the need for making your balance sheet on a date. And then why do you do otherwise? Let's say principle of depreciation. Why would I do it? If I do not assume that the company will continue for 8 or 10 years, why will I do depreciation? I will be accounting then everything for that current year itself, no? So in fact, this can be an interesting question. Depreciation accounting is an example of which fundamental accounting assumption, right? That would be your going concern. Then consistency. It is assumed accounting policies are consistent from one period to other. So you do not change anything. Aaj you're doing a double depreciation. Tomorrow you are using straight line. Then you are doing sum of years of digit wala accounting. No, you cannot do that. In fact, if that is required as per the legal norms in your country or to represent, give the fair picture of your business, then you will do it with complete disclosure. All right. So these you do not have to continuously disclose. This is given. It will be a going concern. It will be consistency, will be maintained. If you violate any of these fundamental assumptions, then you'll have to give a note. All right. That is what I was just talking about, Vikas, right? Accrual revenues now is about costs are accrued, that is recognized as they are earned, incurred and recorded in financial statement for the period which they relate. What is it saying? Your income as well as cost, both are accrued. So even if it is not earned, your money has not come into your account, but then also you can assume if you are reasonably sure, and therefore they have said the consideration affecting the process of matching concept with revenue under accrual assumption is not dealt with the standard, the given one. So there are many, say, loopholes there, how we have to do, and then there are various accounting standard for different kind of work which is there. Say for let's say as for example, I am into a business of constructing house, right? Now, construction of house is what? It will take 2-3 years. Now, it is saying, how do I say take out how much I have accrued? Do you understand? I have just built the first floor now. It will take another 2 years for it to be ready. Then the parking space and everything else. It will take a lot of time. So even accrual, it is not very clear. So depending upon the businesses, whatever you can say percentage of completion method, or say how much task you were kind of broken down it into, if this was a service, in what parts you could break it down into, to all that different accounting standards will deal with. But it is assumed that the cost as and when they incur you will do, unless there is an exception. And income also you will say accept unless there is, say, uncertainty in getting that income. That is the whole fundamental assumption. If there is violation to this assumption, if you want to change anything, you will have to disclose it. So here ABC only will come in here. Now try this one now. Okay, here again I have kind of inserted this matching wala. It is not one of the major consideration governing the selection and application of accounting policy. It's only the first three. What are they? Prudence. What is prudence? It is saying what you should say recognize as your income. Say, let's say today's something you have bought at 100 rupees, but its market value currently is only 75. So what you should actually be treating as the cost, or say the inventory that you are carrying. So it's always lower of the net realization value versus cost. It's the prudence principle. You will never try to overstate your profit. You will be always trying to say accumulate or say consider all possibilities of losses, but you will never hype up your expected profit. That is giving the wrong picture, right? So you will take into consideration, and it's not that you have to become so pessimistic that you give some unrealistic figure of losses also. No, it has to be prudent. If there is some problem, you will accept it. If there is uncertainty in your income, you will wait for it to happen. That's your prudence, right? So it is in view of uncertainty attached to future event. Profit are not anticipated but recognized only when realized through necessarily in cash. Provision is made for all known liabilities and losses even though the amount cannot be determined with certainty. So losses you are accounting for reasonably, and then profit you will say accept only when it is beyond doubt. All right, that's your prudence ka principle. Substance over form. What is this? It says versus what your say legality of your country expects versus what is real. You will go for what is real, what is ethical. That will be again, this is debate, but yes, what accounting principle says, it will go for substance over form. So suppose what example should I give here? I have a car, yeah, that you have bought on lease. Maybe I'll not get into the technicalities, just trying to explain it to you here. Legally, since you have taken on lease, you might not be the correct owner, but you have used it in your business, right, for say revenue generation, etc. So what substance over form says, though legally this was not supposed to enter your book, I'm giving just ekdam in air example, but you should consider it because you have used it in your production or in your sale, etc. It has actually had material impact in generating your business. That's the meaning of it, right? Materiality is financial statement should disclose all material item that knowledge of which might influence the decision of the user of the financial statement. So something like contingent liability. What is contingent liability? Today आपके ऊपर केस हो गया है, yeah, somebody has put $1 million का case. You do not know what will be the final verdict in court, whether you will win or lose. But since that liability can happen with whatever probability in future, you will need to disclose this. This information will be as note to the account. All the contingent liability are kind of recorded. It will not enter your P&L and balance sheet, but it will come as note to account. That there has been a case which is pending in the this and this court, right? So you'll have to do that. What will come under that? That is again your materiality. And then again the other easier example of it would be something like say you buy a calculator, right? should you expense it or you should record it as, say, asset? Yeah, just think over it. As per my understanding, you should expense it. Yeah, unless आपका काम ही calculator का है. In your business, when you are using calculator, it is an asset. You will use it for a long time, but it's not material. Will that एक calculator का 50 रुपए का in a business of crore, will it have any effect, any material impact? No. And hence such expenses, they are expensed rather than put into balance sheet, right? So that's another example. So all your contingent liability, which will have material impact in terms of future losses or income, or in today's sense, you round off some of the numbers. Why? Again, materiality. वो 10 रुपए, if you round out in crores, it will not have material significance on your final numbers. That's the idea behind it, right? Chalo. Now I told you there are hundreds of other principles in your accounting standard. As per the MCA website, yeah, these are the 6 which I have shown you here, right? Going concern, consistence, accrual revenues, prudence, substance over form, and materiality. But if you go to gap, there are many other. There is principle of conservatism, consistency, which was there also. There is cost principle, there economic entity principle, full disclosure principle, going concern, matching, materiality. Yeah, you will see there is overlap also, but there are some new also. Monetary unit principle, reliability principle, revenue recognition, time period. Now, what I believe you should go through this also, because in your handbook, I saw the options which were not included in those 6. So they can give you this also. So just go through whatever is available in the market, just know it. You should know what is important here is this economic entity principle. The transaction of business should be kept separate from its owner and the other business. So if I and Abhishek sir has opened a company, right, it does not now say Merit Shine is a separate entity than Samir or Abhishek. You cannot confuse both of them together. Merit Shine in itself is an entity now. That's your economic entity principle. That's, I believe, is an important one. Rest also you can read. This will come many a times. Why owner is treated separately from the from the company. That's your economic entity principle. So read all these and just be aware of it. All right. So I hope I have given you the clarity on this also. Don't get confused with GAAP, IFRS, and the Indian Accounting Standard. Indian Accounting Standard is trying to overlap with or try to imbibe in all the concepts of IFRS. With GAAP, which is again a very popular one, if you take CFA exam, you will be learning about GAAP only. There you have more principles. So just know them also. And there is nothing very confusing here. It's not that iska conservatism is different from it, but they talk about more principle. So just go through this also. Chalo, let's move to one more. Again, this question I have picked from your handbook, whatever they have provided. I have kind of added here and made this question for you. Give me the answer for this. Okay, let's look at this. Now, this I told you I took it from your handbook only. So they have given this question, deferred revenue expenditure is showing which principle, in which they have given your matching principle. In fact, this is what kind of prompted me. This question is what kind of prompted me to give you the gap wala, because in our we do not have that matching principle, right? As per the MCA website. But here we have that matching principle. Here this. In fact, in your answer for that question in your handbook should be deferred revenue expenditure kind of shows the matching principle. What is matching principle? I'll again explain, but try to understand these three terms. What is deferred revenue? Let's say you buy a subscription for Economist, right? So what do? Whatever subscription, 3 months, 6 months, or 12 months you have bought, you will pay them upfront and they will send you the Economist magazine as per your subscription. Can they put have to show on 31st March? It will have to kind of show. We have seen this again from the say prudence principle, also from the accrual concept also. These are the costs which have already been incurred till that, and hence this one, the accrued expenses, which is kind of this 11,000 rupees you should show in your book, 1,000 even when you have not paid it out. Yeah, try to understand that. That's your accrued expenses. So deferred revenue and accrued expenses you have understood. This is a fancy term. In fact, one of our accounting standard, if I remember correctly, AS 25 or 26 does not allow this also technically if you look at it. We'll not go into that deferred revenue expenditure. Deferred be a revenue be a expenditure be. It says the kind of expenditure which I am doing currently which will bring me future benefit. What comes to your mind for that? Let's say I run an ad campaign today for 1 month, right? There will be many people who will see it. Let's assume I have run this in the month of March. I'll be closing the book on 31st March, but this 1 lakh rupees, let's assume I spent on this ad expenditure. The benefit of it will come under what? It will come in say April, May, June next cycle, when people have actually seen this ad and they will start, depending upon the goods also it will matter. But I expect there will be future benefit rising out of it because of this campaign that I had run, which the book cannot correctly say account for. And hence I will, what I'll do, these expenditure, I'll not expense it in P&L, but instead put it as an asset in my balance sheet, right? So this is what? This is whatever say money that I have spent has actually become my asset now. This will bring in future benefit. If you will try to understand the concept of your asset, what do the asset do? Over the course of the time, they will give you future benefit. And that is what deferred revenue expenditure technically is supposed to do. The ad campaign, the example I gave you, which you ran for a month, which will give you maybe sales for upcoming 3 months, right? So these kind of expenditures are called deferred revenue expenditure. And which concept does this match with? That's your matching concept. Why? Because you have, in fact, if I clear this, if you will see why it is matching, because you're on in the month of March you had only say 10% of the sale. In the April, after the impact of this ad, you had 50%. In April, in May you had another 30% of the sale, right? And the another in the June. So what you will do, a part of it you can, as per the principle of prudence and matching, 10% of this expense you can take now, right, for the matching. The next one you will transfer from your balance sheet as and when your income happens. That's the idea behind the matching concept. If you go back and read, what is this? The concept that each revenue recorded should be matched and recorded with all the related expenses at the same time. That was the question in your handbook. I hope, yeah, you have understood this, right? Chalo, let's move forward. Try this one now. This. Okay, very good, Shubham. That's, I think, the correct answer also. What we will do here, there are three concepts that you should understand here. What is this? Purchase of second-hand machinery. That does not matter what kind of machinery you buy, first-hand, second-hand. The entire cost is there. And then the amount of repair for making it serviceable. Serviceable wala kya hai? This concept you have to understand. Whatever machinery you buy, right? To say kind of install it, to get it functional, to get it started the first time, right? First time, get it started. Whatever expenses that you are incurring here to get it started the first time, they will all come under the cost of that machinery. So this amount, this 10,000, which was required to get it started and start your production or to make it of any use to you, that will all get added as the cost of the machinery. That's the concept number one, right? The concept number two is about the repairs and renewals of machinery. Please try to understand, unless these are able to show complete material benefit which can be calculated, which is very difficult, they will be very specific in the question. These repairs and renewals will not be added to the cost, right? And even if you will see, this was 30th September and this has already started. The new additional machinery with 20,000 has. This is over and above that. And for which one? You do not even know that, whether it was for the first one or it was for the next one. In fact, these depreciation rates could have been different for different machines. But unless they say this repair and renewal or addition of an extra part has increased the life of the machine by 5 years, that means what? The spend that you are doing is having a material impact on your actual machine and there is actual calculatable, say, life increase in the machine, only then you will add it to the cost of the machinery. And there also there is, again, I'll not get into much detail. If that part which is getting added can be treated on its own, even when the machine to which it is added kind of gets obsolete, then you will treat it differently only, right? That's the entire story behind it. The first one, to get it serviceable, to get it started the first time, you will add it. The extra costs, etc. on the machinery which you are doing, unless a proven increase, say, in the life of the machine, you will not account for it as the cost. This will get expensed. These repairs and renewals will get expensed. So my purchase is this 40 plus 10, 50 from 1st April to 31st March, complete year. 50,000 ka 10% will be 5K and this is 20K. These are getting expensed, the repairs, etc. This 30K is for how many? September, October, November, December, Jan, Feb, March. 6 months. 6 months means 2,000 would have been for a year. 6 months, it will be 1,000. 5K plus 1K is the total depreciation which will be charged. Now, there is another concept here. If I had given, if the salvage value for this machine is, say, 10,000, then what you will do? So, for calculating the salvage value wala, you will do what? Say the cost, total cost, which is 40K plus 10K minus this 10K salvage value you should have subtracted. These are the only concept in terms of depreciation, right? So improvement and repair, I have just given as per the accounting standard what it says. Frequently, it is difficult to determine whether subsequent expenditure related to fixed asset represents improvement that ought to be added to the gross book value or repair that ought to be charged to P&L. Only expenditure that increases future benefit from the existing asset beyond its previously asset standard of performance is included in gross book. Example, increasing in capacity, etc. Right? It will be clearly mentioned. Unless otherwise, these are getting expensed. Alright, I hope this part is clear. Chalo. Now, let me kind of show you different types of depreciation which you will read. So, the very popular one is the straight line, but generally it is not used. Then we have sum of years digit. Many of us haven't heard of this if we haven't gone through the accounting book. And then there is unit of production, which is very sensible. Jitna you produce, utna hisab se you will kind of depreciate. And double declining method, which is also called the written down value method, diminishing value method. This is an example of written down or diminishing value method. Again, don't confuse that. Double declining method is basically takes the depreciation rate from the straight line and doubles it and then uses the concept of the declining balance, right? And there that's basically the example of written down value. So I am giving you a question here, right? Give it a try. Use your whatever knowledge I have kind of explained it to you. Also, I'll explain in detail also. whatever you know till now, just use and tell me with the given data. Here, this is the salvage value here, 0. This is the salvage value 2503. This is the salvage value 0, and here again is 0, and the last one here is 694. Yeah, 694, 694. Okay. All the other things you can see. Try with whatever little definition I have told you. Try. I'll give you 2 minutes and try to calculate which is having the maximum depreciation. Which method will have maximum depreciation as per the given data. This is the units produced. Use your head, no problem. I do not expect you to get it right, but I want you to spend 2 minutes here and then I will explain to you in detail. Okay, so I'll give you 2 minutes for it. Okay, I hope you have tried. Let me kind of show it to you what will be the calculation. A straight line method is very simple. What I have given you with the data, 8 years, the initial opening book value I had given you, this was 25,000. So 25,000, it has to be depreciated over 8 years to give my final salvage value. I told you was what? 0. So I have to kind of distribute this utility of this machine of 25,000 over 8 years. So every year will be what? Yeah, 8 3s are 24. Yeah, it'll get 10. 8 1s are 8. Yeah, 8 2s are 16. 8 5s are 25. So over 8 years, I will be expensing 3125 every year. Yeah, quite commonsensical. Now, double depreciation gets its name from the straight line, whatever depreciation value, 100% of it I depreciated in 8 years. So every year, how much I have depreciated? 12.5. Double depreciation says I double this straight line ka whatever I was getting, just double it. So I'll now depreciate it with 25%. Then what is the difference here between straight line and double depreciation? The major difference is the next value after depreciating for the first time, this 25,000 ka 25% will be what? 25 square is 625. So 6250, if I subtract, I'll get 18,750 as the ending book value, which will become the opening value. On this, I will do 25%. Basically, 1875 into 0.75 is what the value I get, is what I will continue to depreciate. And that is meaning of your written down value or diminishing value. This is the diminishing value. The every value that you are getting after depreciating becomes the next book value every year. and finally you get to this salvage value. The numbers were such that in the last year you got in and around same this 2503 or 2500. Again, this is 3 rupees ka materiality concept. It does not matter. But what if there's just one trick which can come here is, what if in your final wala, whatever the number you were getting was going to reduce this number below. Let's say instead of this 1834, you were getting after your depreciating value, you were getting 1834. So your salvage value would have come to 1503, but still you would have depreciated only 834. Basically, in this double depreciation method, you start with this, you fill your final value, do the complete thing. If it is going below that, stop it there. So instead of 1834, which would have come had the number been such, then also you will do the subtraction of only 834. Yeah, that's the only catch here. Right now, unit of production is very logical. I had given you this data that these units are produced. It says very simple. How much ever unit is getting produced, that is what will get charged off. What is getting charged off here? Just quickly do the sum and give me what is the number here. 12, 6, ho gaya 18, 18 and 12, 30, 30 and 32 will be 62, right? 62 and 23 is how much? 62 and 23 will be what? 85, 85 and 11, 4, 15, 100 units hai, right? So 100 unit ka 4 upon 100, which is 1 by 25 will get charged in the first year, right? 7 upon 100 will get charged the next year. Again, this 4 upon 100 will get charged the third year. 23 upon 100 in this, 32 upon 100 in this, 12 upon 100 here, 6 upon 100 here, and 12 upon here. This is as simple and as logical as it can get. And for a firm which is starting, these numbers also look sensible. You would have started with marketing, you started slowly growing, and then you started kind of peaked your performance in this market also. People know you now, and then slowly machine starts to wear off. Finally, this is very interesting. Sum of years of the digit. What is this? 8. What is sum of all the 8 digits? 8 into 9 by 2, right? So 1 plus 2 plus 3 plus 4 plus 5 plus 6 plus 7 plus 8 will give you what? 8 into 4, 32. So the first one, what you will do is 8 by 32. Next year will be 7 by 32. Next will be 6 by 32. Next 5 by 32, 4 by 32. And that is how you will get your numbers. Is this clear? And that's how the depreciation is kind of calculated. With the given data here, clearly my double depreciation gave me the highest result. Is this clear to everyone? Any doubt here you can ask. Straight line double depreciation, it is a part of written down value. Their depreciation can be given directly 30%. Instead of, say, if I have given you written down value, use 30% as your depreciation. In fact, as per our accounting policy and as per your tax rate also, you can go and see. This is depreciation. I told you it's plant, equipment, and your machinery only. There, your say furnitures, etc. are at 10%. Plant and machinery, it can range from anywhere. I think there are some machines for 20, 30, 40. There are some kind of building which is kind of, say, wooden structure, etc. maybe at 100% or 50%. So it all depends upon, all these are already given. The details are already there as per the tax slab. What income tax is basically allowing you to depreciate, and why, in just again conceptual question, why income tax has a role here. Clearly, whatever you are depreciating, the depreciating value is what? Is it increasing your profit or decreasing your profit? What is it doing? The depreciating value, where does it go? Does it find place in the balance sheet or it finds a place in P&L? Yeah, the machinery account in your, say, balance sheet is kind of getting the hit, but every year some part of it is getting removed and it is getting charged from your P&L. If you have watched the first 3, you would have seen the effect of depreciation that's get charged in P&L, and tax authorities will not be very happy if you are charging significantly higher as in your P&L. If you are charging a very high amount straight away, that means what? You're reducing your profit, and hence the guideline by the tax authorities as to how much you can charge as depreciation, what is the realistic amount to be charged. Are you able to understand all this concept, and are you able to kind of make sense of it? ठीक है, समझ में आया? चलो, let's move to this one. Again, a very simple question. Quickly tell me what will be the numbers, it's simple calculation. Kuch bhi nahi. There is no trick here. Quickly give me the answer in say less than a minute here. Yes, again a very simple question. What do we have to do? The first one, 50 lakh rupees, 10% they are saying reducing balance. So first year will be what? 50 lakh, 5 lakh will be the depreciation amount. This will be my depreciation. This is your value after depreciation, you can say. Yeah. So in the first year, this was my value. This is the first year's depreciation. After the first year, this will become 45 lakh. So next year depreciation in the second year will be what? 10% of this. That's your depreciating value method, right? Or reducing balance method, written down value method, all that. This will be the 10% of the new value. Now the next year's life will become what? 40 lakh, 50,000. There again, now this will be 4 lakh 5,000. So this will be now after 3 years. What is the value here? Is 36 lakh 45,000. Iska now has to be depreciated over what? 8 years from there, and they haven't given me any salvage value. So I'll do 36,000 for 36 lakh 45,000 by 8. This will be every year from there till 8 years. Simple. Chalo. Try this one. Give me the answer quickly. If you have read all the accounting answers, yes, you could have you could answer this to me. Yes, very good, Shivangi. That's the correct answer. The answer here is goodwill, again taken directly from the documents on the website. Yes. Chalo. Now, again, you'll have to, I told you again, this I have kind of gone in detail here, but please try to understand. You will have to read everything very carefully. Just look at this example of this. Everything, yes, both is goodwill only. Here, I told you in the accounting, all the documents, everything which is written in bold, usko to ekdam, read it 5 times and try to make complete sense of it. It can come as it is, right? I have given you some question also to understand. That's the level of depth which I'll expect you to go through all the given mentioned accounting standard that SEBI expects us to go through. Now, an increase in the net book value arising out of revaluation of fixed asset should be credited directly to the owner's interest under head of reserve, revaluation reserve. So what is happening here? If there is increase in the, say, your fixed asset, where it is going, it is not going as profit. It is first hitting what? Revaluation reserves. It is increasing the owner's capital, you can say, to the extent that such an increase is related to and not greater than the decrease arising on the revaluation previously recorded as charge to P&L statement. It may be credited to the profit and loss statement. Now, if it will be only till you will make sense of what they are saying only when you read the next line. A decrease in net book value arising on revaluation of fixed asset should be charged directly to P&L. So what it is saying, if say it was 100k worth of your whatever fixed asset, in the next cycle if it became 95, so what you should have ideally done, should it revalue my your fixed asset to 95, or this 5k should I charge to P&L? That is what we have to understand here. It is saying if there is loss, you will charge it to P&L, right? But if this 100 had become 105, right, then what you would have done, you would have increased this value of this fixed asset as revaluation reserve by 5 and not charge it as profit. Now, what happens after this 95? What if it changes to 105 now? So what you will do, in the profit and loss account, the 5 loss which you had taken, you will extinguish it, and then only 5 you will put as your revaluation reserve. Are you able to see this? That is what this line is trying to say. And with that detail, you will have to read and understand everything that they want you to read. I hope this is clear, right? A decrease in net value arising on the revaluation of fixed asset should be charged directly to PL, except that to the extent that such a decrease is related to increase in which was previously recorded as a credit to revaluation reserve. Agar isme pehle this was 105 and then it became 95, then what will happen? Not complete 10 will go down. It 5 revaluation say it will go down and 5 will go in flow as loss in P&L. I hope this is clear, right? That is how we are supposed to read it. आया समझ में? Okay, all those bold one in your accounting standard, whatever is mentioned by SEBI, please spend some time on it. And they're interesting, trust me. Chalo. Give me answer for this. Yeah, most of you are answering all the above, which is incorrect. Yeah. Why? Because this I have changed. If you look at inventory or asset, it's held for sale, not in any course of business, right? So suppose Merit Shine is in the business of teaching, right? We charge you for teaching, right? Now, if I have a car, Merit Shine has a car and it sells it, or till it sold this, can I show it as my inventory? No, this is not not in any course, in ordinary course of business, right? That is the word which is used in defining. What does that mean? The normal course of business which you are doing, not any course of business. I happen to sell my car, which at that time was not my inventory, but my fixed asset, right? And hence there is a very interesting question. When I give you, say, a land, right? So where will you say, when we are kind of say some XYZ business is purchasing land, where it should record it? Should it go in balance sheet? Should it go into say your inventory, or where it should go? Just think land. If say I give you just this information that XYZ company has bought a land worth 1 lakh rupees, can you say where this entry will be recorded? Just think and tell me. Yes, you cannot say it. Why? Because let's say I am a builder. What I do, I buy land and then I construct houses on it, right? For me, what is land? Land is neither an investment, yeah, neither it is my fixed asset. It is inventory for me. Pieces of land where I construct buildings, they are inventory for me if I am builder, right? And for that we have that AS7, if I remember correctly, will go under kind of explaining that. But please try to understand nature of business is very important, and hence this statement, inventories are asset held in not any course. This you cannot say in ordinary course of business. For builder, what is the ordinary course of business? Is your making buildings on those land. For him, land is his inventory. For merit shine, if we buy in say 1 lakh rupees ka land, what it can be? It can be my fixed asset where I'll set up my office, right? Or it can be an investment opportunity where I think this land here in say Greater Noida will I have excess cash of 1 lakh rupees. Anyways, my current account is not giving me any income. So we'll buy a land for merit shine as an investment option, which will become 10 times in 10 years or something like that. If we think there is a possibility, that will be my investment. Whereas if I'm kind of buying the land to set up a factory, etc., this piece of land will become what? My fixed asset. So you see, the same piece of land can be inventory, can be fixed asset, can be your investment. I hope you understood this concept also. So unless you know the nature of the business and where this concept come from, by defining inventory, it is held for sale in ordinary course of business. Yeah, very important here. And hence I told you, when you have to read this very carefully, they can play with any word here and the complete meaning changes. Chalo, give me the answer for this one. Yeah, it's very simple question. Again, it is from para 5 of AS2. Valuation of inventories should be valued at lower of cost and net realizable. They are not, in fact, if you read it, they are writing and net realizable value, which makes sense, but it is either lower, whichever is lower, the cost or its net realizable value, that will be taken. And for different item, it has to be taken individually. That is the only two concepts which is used here. So historical cost 40, net realizable cost or net realizable, whichever is less, 28. 32, 32, 32 does not matter. 16, 24, 16. So what is the cost here? 6. Here 3, 2, 5, 6 and 1, 776 will be. I think all of you got that correct. I'm very happy. Right? 28, 32, 16. Again, that's taken directly from your para 5 of AS2. Okay. Okay, I think I gave you the answer here directly. Don't look at it, just try. I think I just wanted to give you another question on this. Yeah, so 40 lakh till March, 75% of the stock was sold. The company wants to disclose, the closing stock at 10 lakh, which is kind of quite sensical because 3/4 has been sold, 1/4 is remaining. So 40 by 4 is basically 10 lakh. But what is the net realizable? This is your cost, historical cost, and your NRV will be equal to what? The expected sales value is 11 lakh, but 10% is payable to the agent. So 10% of this will be how much? Yeah, so 11 lakh ka 1.1 lakh will be your say commission that you will have to subtract. So net realizable value will be only 9.9 lakh. So you will have to kind of put this value at 9.9 lakh. That is your NRV versus cost, which is lower here. NRV. Okay, chalo. Try this one now. Again, kind of just copy pasted here. I did not change anything here. Some of you, yes, I understand. Some of you are thinking that storage costs, unless these are necessary, you thought it will not be there. No, these are also excluded. And unless it is necessary in the production process, they will, if it is necessary, then that cost you will put here. So here, all the above should be excluded. This is as it is taken from your, say, document. Yes, all of them need to be excluded. Now here, what is abnormal waste? In any production process, you will assume when you are making say 100 unit, 2% will go bad, 98. But if in case you got that 96, then this 2 will be over and above the normal which you expect. That is called the additional waste, will be called the abnormal waste. This will come in costing. Ratnaba sir will take care of that. Also, what is the standard method which for your costing, etc.? Your FIFO LIFO is what is, you would have heard of it many times. Last in first out, first in first out, which is a preferred method, and then there is weighted average, right? So which method do you think is generally accepted, or which is told to be used by your Indian standard? So it's very simple. Whatever gives the correct presentation, right? So generally it's first in first out is basically used. So if you bought a good at say 4 rupees, the next one at 425, the next one at say 450, and then next at 5, you are selling this, right? So the cost also, you will basically, the cost of carry basically should represent what is the latest prices. When the prices are falling, then you may say LIFO might be used, but generally hardly happens. What even our say Indian standard says, you take either the weighted average or your FIFO method. Yes, that is what is generally recommended. First in, first out, whatever bought first, with respect to that, you will do. If you ask me what is better method, is your continuous weighted average is giving me the best possible representation. While LIFO were again used again for tax purposes, if I do, if there is continuous increase, say I bought the first good at 3, 4, 5, 6, 7, and then I'm selling it at 10, how much profit will I do if I do last in first out? Last in first out will 7 will go, 7 minus 3, I'll show only the profit of 10 and pay my taxes accordingly. But in case of FIFO, I would have paid taxes on 7, right? 10 minus 3. And hence these were used. But yes, most of the countries have sorted this out. Hardly anywhere it is used unless, they can prove to the authorities that this is what will give me the correct picture of the, say, goods or inventory in my books. Chalo, try this one now. This is again conceptual question as it is taken from the document. The concept, the question is here. Simple question, why it is taking so much time? Okay, in the previous one, when I had mentioned about this abnormal amounts, the normal losses will be kind of taken into the only, the cost of good, etc. The abnormal one, they will flow into P&L, right? Here, it's very simple, again taken from para 24, which says material other than supplies held for use in production of inventories are not written down below cost if the finished good in which they are incorporated are expected to be sold above cost, right? So even if, say, the kind of, say, raw material, if I had bought for 100, it has gone down to 75, but if my final good is giving me, yeah, the final net realized value is kind of giving me the profit here, then I will not write it down. However, whereas a decline in the price of the material and it is estimated the cost of finish will exceed the net realizable value, the material are written down to net realizable value. That means you will not be able to make profit out of it. Then better write down the cost of the raw material that you are carrying. What was my question here? When the selling price of finished good was 175, the raw material should be valued at 75 because selling price of finished product is less than 225. Why it is becoming less than 225? Just look at this. This was my 100. This was my cost, right? I will need how much? Another 125 rupees to make it the finished good, but ultimately I'll be selling it at what? 175 only. That means I will incur losses here, right? Why? Because I'll be gaining how much? Only 175, but my actual cost has gone up to what? 225. So it is prudent for me to write down my inventories below this. Now the net realized value here will be only 75, and that is what I will take from the option of the cost versus NRV. And this happens when my final good that is not giving me profit. Whereas in the second, 100 was my cost, 125 is my, say, conversion cost, 225 will be the total cost, 235 I have sold, I am still making money. Even though this 100 rupees ka market price has become 75, I'll still carry the inventory at 100. This is very conceptual question. Yes, I hope this is clear. आया है समझ में सबके? Why this is done? Again, this is as per what is written there. your NRV versus cost. Generally, materials will never be written down below cost unless the final finished product that you are selling, wo bhi you are not able to kind of say break even with, right? So the 100 ka cost of the material plus 125 other costs, 225 ka, if you are not able to touch this, then this 100 co you will have to bring it down to the NRV. If you are able to touch 225, even not just 235, even if it was 225, you would not have written down this 100 to 75. This is very important. आ गया समझ में सबके? Yeah. So this is how I expect you to read all these accounting standards के documents. This is the detail which is expected. Try this one. Give me the answer for this. Now I think we are into the next revenue recognition. Inventory price taken on the selling price अगर your net realized value of the cost से नीचे चला गया, if even in the market price, if that 100 का cost is become 110, 120, then you do not have to worry about. Then it will be taken at cost only. Only time when you value it below the cost, the inventories, the raw material will go only when your expected cost plus the processing cost is still not giving you a price to break even. Then you will have to write down your inventory, the raw material ka cost. That's as per the accounting standard, Rao. Try this one. Yes, very good. Yes, Saurabh, the answer should be no here clearly. Why? For what it says, for the revenue recognition in your these investment, you can recognize your dividend only when it has been declared, when you have right to receive it. And when that becomes a right, balance sheet basically gets done on your 31st. Then what happens? It goes to board of governor. They will accept this. They will kind of then declare whether dividend has to be given or not. Then in AGM is called. This under this AGM, whether this dividend is increase or decrease, basis that your next AGM will be called. I think they cannot decrease this. I think they can increase. If they decrease, there will be another AGM called, and then there is vote on account. Then the final your that declaration by the company will come that yes, this dividend has been done. So at what point you will basically say that you have received the right? No, it is not when the board of governor kind of say that this dividend should be there. Final approval by the company, yes, after annual general meeting, when it has been voted and passed and accepted, only then it becomes yours. Before that, you cannot treat dividend as your income. That's incorrect, right? That is what very specifically the rule says. Dividend reward from the holding in share, when it comes, look at this. Dividend from investment in share are not recognized in statement of profit unless the right to receive payment. And when is the right to receive payment? That is after that complete declaration by the company, after the AGM voting etc. happens. Only then it can be done. The other two income from investment could be interest and royalties. Interest here, charge for use of cash resources or amount due to enterprises. So suppose company X lends a machinery to Y at some interest, whatever it has given, and it has also given it some patent, etc. Right? Some publishing right or something. So all that, this publishing right wala will come under royalty, right? But this lease of say at certain interest rate, this will be time bound. So if you have done for 12 months, 3 months if happened in the previous year till 31st March, that will be kind of counted here. The royalty wala will not happen. It will happen say per volume. Yeah, that is the change. You will say what is the difference between use of cash resource amount due to enterprises. If you see, interest accrues in most circumstances on time basis determined, and royalties accrues in accordance with term of relevant agreement. So what is the difference here? Here in interest wala, if I signed on 1st of Jan at 12%, right, for 1 year, right, of 100 rupees. So I was supposed to get in 12 months how much? 12 rupees. But from 1st Jan till 31st March, I will be eligible to get how much? Only for 3 months. So 3 rupee will come this month and next will come 9th. And how it is different from the royalties, etc. In this, maybe the sales cycle in the first, say again, of the total revenue that I get of 100, in the first cycle I get only 10 rupees. In the next cycle, the next 90 will happen as and when the sales happen. So this will not be time bound, it will be sale bound. And that is the difference between your term on time basis determined and versus the term of relevant agreement which is there. Generally for royalties, it is per copies, right? Whereas for interest, it is generally time bound. I hope this is clear. Chalo, let's move to the next one. Again, this is some criteria, key criteria for determining when to recognize revenue from transaction involving the sale of good is that seller has transferred the property in good to the buyer for a consideration. The transfer of property in good in most cases result in coincide with transfer of significant risk and reward ownership to the buyer. If you will see, this is very vague and there is complete way of recognizing how the transfer of risk and ownership has done depending upon the terms of the purchase. I can buy a good at the seller's warehouse. I can buy it delivered my warehouse. There is complete range. Terms of trade, Inco terms and trade. If you will read, there is like variety of possibilities in which the sales can happen, and depending upon the term of contract, that will change when you will consider that the significant risk and reward has been transferred. But whenever that is according to the terms of sale, then you will recognize that sale has happened. Again, here prudence principle says without doubt, when you have given your risk and reward to your buyer, only then consider it to be your income. Till then, wait. Buyer might return some good, some maybe damage. He might say कि नहीं रास्ते में आग लगा. Till that, you were supposed to be the custodian of the good as per whatever the agreement is. So again, the prudence principle says the revenue to be recognized only when the significant risk and reward of the ownership has been passed on to the buyer. Yes, this has to be understood very clearly. This they can again put it as it is, and then of course I told you the complete Inco term, and they can make questions basis that if I have bought at the warehouse, ले जाते वक्त if आग लग गया, whose loss will that be? Yeah, and then questions, conceptual questions like that. Revenue from services transaction usually recognize as services performed either by the proportionate completion or by the completed service contract. This is again very interesting. And here your risk and reward wala transfer nahi. If I am teaching you, you are paying me say class basis is class K, if you are paying me 100 rupees, then you can say this will be again, okay, this is good example I will say. So I started teaching you on say 31st March ke raat ko 10 p.m. and this class runs for say 1 p.m. Then can I 1 a.m. On 1st of April. right? Technically, can I accept this 100 rupees income in my P&L this year? Yeah, technically no. Why? Either by proportionate completion or by the completed service contract method. So my service is getting completed when I have a service which cannot be broken into part. आप बोलोगे सर आपने अभी ये पढ़ाना शुरू किया फॉरेन इनकम ट्रांसलेशन और ये सब तो पढ़ाया नहीं, वाई शुड आई पे यू दैट 100 रुपीज? रात के 12 बजे मैं बोला चलो हो गए 90 रुपए तो दे दो यार, इतना पढ़ा दिया. नो, यू कैनॉट, आई कैनॉट से लाइक दैट बिकॉज माई कॉन्ट्रैक्ट इज सच दैट जब तक मैंने क्या बोला, टुडे आई विल बी टेकिंग केयर ऑफ ऑल द अकाउंटिंग स्टैंडर्ड्स व्हिच इज देयर इन द सेबी सिलेबस. तो वो खत्म होगा 1 बजे, तभी आप मेरे को पे करोगे, एंड दैट इज व्हेन आई एम सपोज टू रिकॉग्नाइज दिस एज माय इनकम एंड नॉट बिफोर कि नहीं 90% पढ़ा दिया, चलो अब मेरे को जाने दो, 90 रुपए तो सब मेरे को अकाउंट में ट्रांसफर कर दो. नो, आई कैन नॉट डू दैट. वेयर एज देयर कैन बी सर्विस विच कैन बी ब्रोकन. से सिक्योरिटी वाले हु कम्स टू योर हाउस और से someone in your society, so इनका क्या है, monthly basis they are giving you services. So even though you hired them from 1st January, the contract is for 12 months. 3 महीने तो they have guarded ना, on 31st of March they have guarded your house and society, so pay them for this 3 months. So when the service can be broken and apportionated, then you can kind of recognize it in part. Whereas if it was like a one-time delivery, doctor is conducting a surgery on your heart, वो रात को 12 बजे बोले चलो हो गई मेरी सर्जरी 60% कंप्लीट, इसके पैसे अभी लाओ, दिस आई हैव टू रिकॉग्नाइज इन माय बैलेंस शीट. नो, सच you will not break it down. In fact, that is the problem. If you will say, then I kind of, if you remember, I kind of started with an example of housing contract. I am a builder and I started the building. I have expensed lot on construction, cement, etc., warehouse, all the people that are employed, sales office, front office, this, that, saleswoman, sales boy, all that. And then my construction after 1 year is only 30% complete. So what should I do? So there is a separate accounting standard for these, wherein can you break it into part, percentage of completion method, can it be done or not? So depending upon the kind of services which you have putting forward, there are different standards for it. But the overall prudence and matching and that principle kind of says that you should, if it is possible to determine accurately, you do that. But say a service like performing a teaching task or performing a surgery, etc., will not be done like that. Again, an example for a chartered accountant could be he started auditing your books from 31st March से थोड़े से पहले आकर के, and then he will give his final say comment on say 30th of May. कैन ही से नहीं 31st मार्च तक मैंने बुक्स के तुम्हारे जर्नल एंट्रीज वगैरह चेक कर दिए, इसका मेरे को 60% पे मी नाउ. नो, इट विल नॉट हैपन. दैट विल अगेन कम एज नॉन डिविजिबल से सर्विस बिकॉज हिज फाइनल वर्ड आफ्टर ऑडिटिंग is what matters. That will happen only when the complete service is done, and hence he should recognize the revenue only in the next year. ठीक है, ये वाला पार्ट समझ में आ गया. That's how you have to read this. Now this is the most tricky part in your syllabus, if you will see, which is accounting standard related to foreign exchange. What I believe here, if you just kind of go back and see in the syllabus, what we have done, depreciation we have seen, inventories we have seen, revenue recognition we have seen, the fixed asset part was part of the depreciation only, I kind of showed you there. Now we have entered into this foreign exchange transaction. Now if you look at the website, ministry's website, the foreign exchange or the foreign currency transaction is only till 8 to 16. From here, foreign statement operation starts. As per my understanding, they will be testing you here. To be safe, you can read till this. The other confusion can be, can AS21 also be included? I will say don't go so far. Concentrate on this 8 to 16 thoroughly, read line by line. I have shown you the importance, how a single word can cause havoc when it comes to you as a question. So be very thorough with this 8 to 16. All the bold part, ekdam yaad kar lo if you can, and try to understand it meaning thoroughly, and maybe in detail try to understand this. This is the longest, if you will see, and hence I feel this is what they are asking in the syllabus is only till foreign exchange transaction, which is there till 8 to 15 only. But I'll kind of introduce you to this integral and non-integral foreign exchange wala part also, so that you have some clarity when you read this. Chalo, so here is your question here. What happens? You buy a good on 1st of Jan from someone in US for $100, right? On that day, the exchange rate, even if you Google, you will see it was 71 US dollar. On the day of balance sheet preparation, it became 75, and on the payment due day, and finally you were supposed to pay him on 30th April. So how will your book of accounts fluctuate? What will be the day on which your first transaction, when you actually issued that bill, was then how do you kind of record it in your journal? On the day of preparation of balance sheet, 31st March, how does it happen? On due date, what happens? So if you are able to understand the complete cycle, it's wonderful. You can also just tell me how much losses or gain will be there for the financial year 1920, and how much of it will go into 1920. If you can give that to me, I'll be very happy. If you understand this, your concept of that foreign exchange transaction is done. Try it. It is interesting. Try to give me the answer. Yeah, what will be the cost of good? This cost of good that you have, okay, if this was the question on inventory, tab kya hota, right? This cost of good here on 1st of Jan will be what? Cost of good on 31st March will be what? Cost of good on 30th April will be what? Tell me that also, then I will be even happier. Okay, so there are some terms here which you should understand here. The first day, the initial recognition. If you will see here, the terms, initial recognition, right? This term here, reporting at subsequent balance sheet days, and recognition of exchange difference. This is what we will try to understand here. The initial recognition is what? 1st of Jan, exchange rate 71,000 good. Book what you would have, your 7,100. Yeah, let me kind of put this on 1st Jan will be 71 into 100. This will be 7,100 will be your cost of good here, right? Now, how you would have translated this? This one would have been the cost of good. Yeah, debit what comes in and credit to this good given, credit to the creditor of this good, you would have written as how much? 7,100, right? Which was equivalent to your 100 US dollars. On the date of 31st March, what will change? Please try to understand this payable amount. This is getting changed now, because now you do not have to pay 7,100 rupees. You have to pay him 7,500 rupees. What is getting changed? The payable is getting changed. If you hadn't hedged, you are basically incurring a loss of 4 INR per US dollar. So basically in this time, you have lost 400 rupees. Your cost of good hasn't changed. Please try to understand here. In your business here, when once you have recorded this, the initial recognition, the cost of good will still remain same. What is getting hampered is your what two heads under your journal entry will be affected. The creditor now, instead of getting 7,100 rupees, should be paid the 7,500 rupees, and this 400 is basically lost to you as exchange rate loss. Next year, This year will be closed. Next year also, your cost of good will not change. You have already kind of creditor is already sitting at 7,500. Now another 100 rupees will be entered as loss for the next year, and your creditor will finally be paid how much? 7,600 rupees. This, if you are able to understand, that is all there is to foreign exchange transaction, and then your transaction is getting closed. Are you able to understand this? So once the good enter, the cost of good is not changing. The payable basically is changing, and hence only that will get revalued on the day of the preparation of the balance sheet and subsequently on the day of actual payment. And that is the entire idea. Even when you read about your integral foreign operations and non-integral foreign operation, there are items called monetary items, non-monetary items, and non-monetary fair value item. So in the case of the goods, what was the non-monetary item? The fixed asset, the 100 US dollar. The monetary item was my cash, the bank balance, the payable, what was I was supposed to pay my creditor, that was payable. If you will see on the reporting date, at closing rate, what did I do here? My payable change from 7,100 to 7,500. My cost of good, no revaluation, carrying at the historical transaction date. What got affected? Where this 7,100 to 7,500 ka the 400 not increasing the cost of my goods. What it is affecting? It is coming as loss in my P&L. Are you able to understand this? Okay, if you understood this, your foreign exchange wala complete is done. So there are two kind of transaction. They haven't given very neat example in CAs का मेरे को यही problem लगता है. They kind of want to keep everything to themselves only. But when you read this, you will see there are three kind of item. The non-monetary item, such as the fixed asset which I bought, the monetary item, the payable, it will get revalued. Yeah, no revaluation for non-monetary fair value. The inventory started at the net realizable value, etc. All these do not get revalued. No exchange rate difference. Only that payable wala part to your creditor will kind of reporting date and also on your final settling date. Now, if it is non-integral foreign operation, this is same as what kind of I did for a business which is situated in India and doing business with say US entity. If I had a business entity in US which was integral to my foreign operation, then also I would have treated it in the same way. Whereas if it was non-integral, then what I do, even the monetary and non-monetary, all of these are basically getting revalued at the closing rate. That is the only change. And treatment all exchange, this is again carried to the balance sheet. Whereas here this was carried to, there is no difference. So the your non-monetary and non-monetary fair value का कोई problem ही नहीं था. It is continuing to be at this existing rate. Only the monetary items such as payable got carried to the P&L. That was for the integral or for the normal operation as we saw in the previous example. For non-integral foreign operation, I don't think they will ask you beyond this. That what happens, it will get all revalued at your closing rate. Exchange rate on the date of transaction is only the income and expenses of non-integral foreign exchange operation, and any revaluation is getting passed on to the balance sheet. इससे ज्यादा और कुछ भी नहीं है ना यार शिवांगी. Only then their treatment is different ना. One place what I read was, suppose SBI is having a bank in US, right? State Bank of India US, that is the integral part of it. There they will kind of work as this. There is some operation of State Bank of India as a some mini lender, say micro lender in Nepal, not even operating under brand name of SBI. That will come as non-integral operation, and when I have to consolidate into my balance sheet, then these monetary item, non-monetary, all I will do at the closing rate only. Any exchange differences that have come will pass on to the balance sheet. Here they would have flown into my P&L. इसमें तो कोई दिक्कत ही नहीं होती. Yes, this is the best that can come as an example here. Is this clear now? Yeah, these things could have kind of confused you here. I told you again, focus on 8 to 15. If you want to read beyond that, you would have encountered this integral and non-integral wala. There I have explained you what those paragraphs will mean. I have kind of summarized it to you from here. आया समझ में? Is this clear, Shivangi, now? There is a difference. Only then their treatments are also different. Na? Under normal course of operation, your normal operation and integral, they are treated similarly. ठीक है, चलो इसको देखो एक बार. As it is, all of these do not deal. AS13 does not deal with these, which is already there in AS9. It is not dealing operating or finance lease. It is not dealing investment or retire benefit plan. It is not mutual fund venture capital. It does not deal with. All the four are excluded. Right? Now, this is interesting. Read this very carefully. What is the carrying amount of investment? What is the disposal of investment? What it means, we have to understand it very clearly. Investment, again, what is investment? As current investment should be carried in the financial statement at the lower of the, if I kind of change it ना, आपको थोड़ी सी दिक्कत हो जाएगी. Investment classified at long term investment should be carried in financial at cost. If I had given you true or false में at cost or lower of the cost or fair value, and if I had given you 3.2, I'm sure 50% of you would have said this is true. And this is what I'm saying, when all these things which is there in the bold in the document, ekdam अच्छे से पढ़ लो, try to make your own handwritten notes there. You should not get confused. Investment long term should be carried in the financial statement at cost. Short term, the current investment should be carried in financial statement as lower of the cost or fair value. Right? The prudence principle again will come here, right? And here, is wale mein, it will be at cost. However, position of diminution shall be made to recognize a decline other than temporary in the value of investment, such reduction being determined and made for each investment individually. Unless something catastrophic happens and you say, nahi, ye to European Union is gone. Unke bonds have really gone. So I had that 10-year wala bond, I'll have to review and kind of de-recognize. In fact, I have to kind of devalue it at the new rate, which is now recognized. Right? Only in such cases. Otherwise, you will put it at cost. Right? Unless there is एकदम sure ना कि हो गया इसकी तो मतलब बैंड बच गई है यूरोपियन यूनियन के, and they will not be able to give me this return anyways. So that my long-term investment, I'll kind of have to bring it down. Otherwise, it'll be at cost. For the current, lower of the cost or fair value, whatever, that lower of the cost or NRV, that is always there. Principle of prudence will always dominate. Right? So read these lines very carefully. Any reduction in carrying amount or any reversal of such reduction should be charged or credited to what? P&L. Had I said, it will go and affect the nature of your investment. What I mean to say, अगर ये 100 का investment था and there is revaluation के बाद 5 का, if there is profit. So what should I do? Should I pass this as 5 rupees in P&L or should I revalue my investment as 105? Just look at this. This is a very logical question. And many of you will get confused unless you know what the accounting standard says. As per the accounting standard, my investment will not be revalued, but it will go as my P&L. So there are more, say, cum interest, X interest. I'll not confuse you there. If I see some, high level question in your prelims, maybe I'll take another class and do some more question there. But with this, whatever I have kind of shown you and asked you to read, if you read it thoroughly, you are good to now handle your this wala part also, right? So again, coming back to your syllabus, if I come back, so we have done this, all the accounting standard preparation I have done. Next term, in my next class on the accounting, I'll do this cash flow, fund flow, financial statement, ratio analysis with some questions which can be asked. The theoretical part I'm saying, the first 3 lectures which I have put, if you will see, you will understand the concept thoroughly. One actual company will do the complete your say tia pacha of the financial statement of that company and understand it thoroughly. After that, what we will be left with, accounting as financial information system, that we have also covered. Now we'll be left with, after that we'll be just left with this. This is small only, employee stock option buyback, and this I think I'll try to again cover in one class only. So another 2 or maximum 3 class and we'll be done with our accounting syllabus. Is this clear now? Yeah, so please watch this. If you haven't watched the accounting 1, 2, 3, please watch it. Otherwise, next class you will not be able to appreciate anything in accounting 5. Anything else that comes to your mind, you can ask me now. For the economics, yeah, I saw someone mentioned why I had removed all my previous RBI. So I was seeing the views were not there, and whatever views were coming, it was attracting some weird comments, and we do not have time for trolls. So we thought better removed it. Agar kadr nahi hai to hatai do. So but for now, because you're preparing for SEBI, I'll again put all the relevant economic again visible. We put it on private mode, so we'll again make it public for you. Whatever is required, it will be there in your playlist. And the source document for that is your NCERT class 12th, right? So watch all the videos, which I'll again make public in the economics wala for your upcoming lecture in the economics, and read all those 5 chapters in NCERT. This is work, huh? I think there will be 4 or 5 videos which I'll make public now and done with. And then all I'll be left with is to explain you ISLM curve, right? ISLM curve. In fact, ISLM BOP is not there. I'll introduce you to ISLM BOP also. And by that, we will be done with our economics syllabus also. Financial information system, यही इसी में यार, the first, the introduction वही है वो. Financial information system में कुछ भी नहीं है. That accrual system and all that which we discussed now, that is there. और क्लास 11th के बुक का फर्स्ट चैप्टर अकाउंटिंग एज फाइनेंशियल इंफॉर्मेशन सिस्टम, जस्ट रीड दैट. हाउ इज बैलेंस शीट मेड, हाउ मेनी sides are there, what is double bookkeeping and accounting different, just read that class 11th का accounting का first chapter. ठीक है, so I hope this is clear. So next class in accounting we'll be doing this, and for eco I'll open all your private lessons also. I'll put that in that turbo playlist. Read this for all 5 chapters, watch this 4-5 videos of your NCERT, your income accounting, etc. Everything I have already done. We'll do some questions there, and then ISLM BOP, and we are done with it. Thank you very much for your time. We will, it will be there in your turbo playlist, which is there in the description of the video. I'll also give you that site, MCA ka site ka wo web link also, from where you can read all these accounting which I had kind of shown you on the first slide here, right? ये वाले सारे पढ़ लो अच्छे से. You just cannot leave any of these. जिस पे भी ये वाला हो रखा है ना, the other color, disclosure, valuation, depreciation, revenue, accounting for fixed, effect of foreign exchange, and account for investment. Read them in complete detail. ठीक है? Description में you will see the link and it will be updated in next couple of hours. Thank you very much. Keep studying, guys. Just another 15-20 days before you kind of see through your first phase, and then another 1 month of slogging, and you might get into one of the most prestigious job.